Hello everyone. Today, China has become the #1 competitor of the United States in terms of economics, military, diplomacy, and technology. They have the strength to nurture their ambition to overthrow the US throne. Washington sees this and wants to prevent it. However, to be honest, they are powerless in restraining China's growth. Why is that? Let's find out. In the 1980s and 1990s, the United States was constantly shaken by the fear that Japan would surpass them in terms of economic scale. This did not come from imagination but from statistics. Firstly, large industries once dominated by the US, such as automobile manufacturing, computers, electronics, semiconductors, shipbuilding or steel, were mostly taken over by the Japanese. Secondly, thanks to booming exports, their accumulated money increased day by day and was invested everywhere to make a profit. They once used more than $100 billion to buy famous U.S. assets such as Rockefeller Center in New York, Columbia Pictures, or Pebble Beach Golf Course. Many Washington newspapers at the time wrote that the Japanese were buying America. Finally, according to economists' assessments in the 1980s, Japan's GDP was equivalent to about 70 to 80% of the U.S. And to restrain their younger brother from surpassing them, Washington used pressure to force Tokyo along with Britain, France and Germany to sign the Plaza Accord in 1985. According to this agreement, all four countries agreed to allow USD to depreciate against their currencies. This helped bring export advantages to the US. We can understand it simply as follows. In 1985, a bunch of Japanese vegetables exported to the US would earn $1 equivalent to 240 yen. By 1988, that same bunch of vegetables still earned $1. But because US money had depreciated twice, $1 could only be exchanged for 120 yen at that time. So to achieve revenue equivalent to 240 yen before, Japan had to raise the selling price of a bunch of vegetables to $2. Other products were similar. This means that Japanese export goods suddenly became expensive and unacceptable. When consumers turned their backs on companies from selling water spinach to cars, they had to withdraw from the US market and make way for local businesses. From there, Washington will regain its position as the world's #1 superpower producer. Everything went smoothly. However, today the US economy is facing the possibility of being dethroned for the second time. China is no different from Japan in the 1980s. Specifically, they are currently the largest producer in the world and dominate many important industries such as electronics, including smartphones, computers, TVs. Automobile production. In 2022, they exported 12 million units compared with 8 million units of the US. Steel accounted for 52% of global output. In addition, there are also textile and consumer goods industries. Thanks to doing business, China has a lot of accumulated money, of which about $860 billion is used for lending to the US through treasury bonds. More than $1.3 trillion is given to Chinese investment groups for management. This is currently the largest investment fund in the world. They have used about $145 billion to buy US assets. Most of these are M&A transactions, especially in technology and real estate. If Washington's government did not impose investment restrictions on how many assets China could buy, it would be much larger. Another similarity with Japan in the 80s is that in 2022 China's GDP was equal to 73% of that of the US. For these reasons, fear of being overtaken by China is engulfing America, and of course they don't want to sit still waiting for abdication. In 2018, the United States raised tariffs from 10% to 25% on nearly half of China's exported goods worth $250 billion. Although different methods but also similar purposes as applied in the past with Japan when taxing Chinese goods high, they will not be able to sell cheaply if raising prices, then consumers turn their backs, forcing companies have to withdraw from the US market, creating opportunities for local businesses jumping into place. However, results were not as expected. China retaliated by imposing similar taxes on 90% of US goods worth $110 billion. In the end, one pokes an eye, one cripples a leg game must be temporarily stopped. The reason why America cannot hold back China is because both sides are too dependent on each other. Let's look at these numbers. In 2022, Mr. America exported goods worth $292 billion to China. Conversely, Mr. China exported $691 billion worth of goods back, making a bilateral trade value calculation. This number is larger than that between America and EU. Not only exchanging goods with large quantities, Washington is also a leading investor in Beijing for more than a decade. The accumulated capital to date has reached $256.2 billion. Hundreds of their companies such as KFC, General Motors, Microsoft, Boeing, Nike, Coca-Cola, are generating about 30% profit in the billion-dollar market. In addition, China is also an important rare earth supplier for the U.S., accounting for about 74%. They are commonly used in electronic and military equipment. Because of this symbiotic relationship, whenever the U.S. introduces measures to restrain China's development, it means they are harming themselves. However, once hated regardless, Washington's government is still trying to make it difficult for Beijing. Specifically, they have called on their allies to join a campaign called Clean Network aimed at isolating Chinese technology companies, in which there is a boycott of telecommunications equipment from Huawei and ZTE. In military and security activities, the U.S. also frequently accuses China of human rights violations as well as repression of people in Xinjiang. This is of course good in terms of morality, but at the same time it also aims to lower Beijing's prestige on the international stage. In addition, they also support some countries with territorial and maritime disputes with China, through which they conveniently describe Beijing as expansionist and bullying the weak. Even the U.S. has been very successful in portraying China's debt trap foreign policy, meaning lending money to other countries causing them to drown in debt, then when they do not have enough ability to pay they have to concede in allowing resource exploitation or increasing imports from China. In general, the U.S. has used many unique tricks to paint a negative image of Beijing all over the world. However, there is one thing they cannot do, which is to convince their allies to limit doing business with China. The main reason causing them also considers Beijing as their top partner, then how can they say their younger brother? Currently, the largest trading partner of the European Union, Taiwan, South Korea, Japan are all China, not America. So what else can be said when living depends on each other? How can you harm each other? The video ends here. Thank you for liking it. Goodbye and see you again.